Welcome to Tradespoon and Yellow Tunnel. My name is Vlad Karpel. I'm CEO and founder of both companies, and today we're going to have a live trading room open to trade stock and options using our technology. For those of you who are new, welcome. If this is your first live event, do me a favor, type in first. Always want to welcome new subscribers. Everyone else, all the returning subscribers, thank you very much for participating. Really appreciate your time. Streaming live or watching the recording, please click on subscribe. A lot of people are actually watching the videos but don't subscribe apparently, so it would greatly help us with our marketing effort, and if it helps you navigating the current market condition, it will probably help other people. So please like, subscribe to our channel, search for Tradespoon, subscribe to our channel, hit on like if you like the video, and share them on social media. Involve risk and not suitable for everyone. You must be aware of the risk and be willing to accept it in order to invest in current market conditions. I'm not a financial advisor. I'm not registered with FINRA nor SEC. I'm showing you what I do in my own account based on my own risk tolerance level for general education information purposes only. Please consult your financial advisor prior to making any trading decisions. All right, trading psychology is important. Again, if you follow Yellow Tunnel, there's a blog every Sunday. I send a blog, cover different chapters on trading psychology, right? Talking about the way we make our decisions, especially when there's a lot of uncertainty. Right? You have system 1, system 2. System 1 is more biased, emotional, based on recency, information. System 2 is more analytical, right? When you face with uncertainty, you want to engage both systems, not just rely on the first kind of knee-jerk reaction. For that, we need process, right? We need process and need some kind of documentation. So I still encourage everybody to have a written document that tells you what are your rules, right? I'm going to go through some of my rules, right, for your trading plan, short-term, long-term, and document your trades. Right? Keep a journal, grade your, if you follow your trading plan, A and B. If you deviate, C and D. Most important, the biggest, discrepancy between what you plan and what you actually do is usually position size, right, and following the stop levels. Again, there's an article I published on blog, the idea of risk aversion, right? Risk aversion does help in our trades. Sometimes, cutting our gains short and letting our trades long, go too far. Very well explained phenomenon. It's been studied in all the financial courses. The guy who wrote the book, got a Nobel Prize. So the majority of the people have that. You just need to build tools how to deal with it. The biggest tool that I found is position size. If you recognize it and then have a plan of attack. If you don't have the right position size, it doesn't matter how many articles you're going to read or blog. The fight or flight response will kick in, and then and then you make your decision with system 1, right? Fight or flight response. So position size is important. Trade small, trade often, compounding investment, right? Instead of looking 10 baggers, right? Small. Instead, you can look for 0.5% gain, 1% gain in short, trades, medium-term trades, 2%, and it will compound, right? 1% a week, you multiply it by 50. Portfolio drawdown, look at number of position size, right? No more than 4 positions if you're new to Tradespoon or Yellow Tunnel, and position size 2.5%, right? Right now, I think it's relatively easy to determine, target gain and stop losses, right? You can time it, but you can very efficiently. But you can say that, okay, looking at this chart, Spider's support is 432, right? We tried to break through this level in June, unsuccessfully to the downside. Through August, bulls were able to defend it. In June, they were able to. So we're talking about 6 months, right? And same thing on the downside. So for short-term aggressive trader, I would say 431 is your lines in the sand, right? If you're doing day trading or you're holding position for a couple of days, aggressive short-term trader, I would say 430 is a line in the sand. Model C is still negative trend. Market is overbought. 437, 432. Okay, as long as we're about 432, 430, it's a pattern of higher highs, higher lows. If we drop below 50-day moving average, we drop below 431, we're probably back in this range between 420 and 430. So those are your target gaining stop losses. You don't really have to be a bull or bear. You can just say, okay, this is my, I'm using stock forecast toolbox. That's my support number 1, right? Short term, and this is my support number 2, 420. I mean, 200-day moving average, I would say. More also the gaps. Gap 1, gap 2, and then you have 420. Right, so these are your support levels. Market can do this, right? I mean, Powell speaks today, or it can do this, depending on what he will or will not say. I'm going to assume he's not going to say anything new. So something along those lines, right? And nobody wants to sell. All right. Any questions on position size? Right, so 430, if let's say you bind, you say, Vlad, okay, you send. So if you're buying, that's your stop level for day trading. If you're buying at 437 and stop losses 430, 2%. If I'm managing $10,000, that's $250. 2.5% of 10,000 is $250. If you're managing $5,000, 2.5% is $125. So I take $250. I think that I would not chase this rally. It's a little bit overdone, or it's a lot overdone by any technical indicators. You can see volume is, deteriorating. You have RSI, MACDs, all of these indicators showing the deterioration. So I would split it into 2, right? Instead of risking $250, risk 125. And if it drops to 430 or if it drops to 425, then you have a decision to make, right? You might, Elmar, welcome back. You have a decision to make whether you want to go long or short. All right. Meanwhile, we do have earnings. Small earnings is going to start winding down. Small mid-cap companies announcing earnings. You have Robinhood, Lucid, Rivian, CPNG, eBay. Those are the one that monitor demand energy and accidental petroleum. Okay. All right, so I did Rivian. So we need to manage a Rivian trade. Before it opens, so Rivian, sorry, not Rivian, eBay. eBay. Rivian, we talked about eBay. I did sell puts. I think the risk was to the upside, but out of the money calls. So Rivian is up pre-market. So for now, I'm just watching. eBay, on the other hand, is 36.5 put, and eBay is trading at $37.29. So it's still 70 cents away, 2%, but it's close. It's getting. You have 2 choices. I can take a loss, right, and close the trade, or I can monitor it. Try to close by the end of the day by defending, right? If I see that it's approaching to my short strike, I can, sell calls. Sell short the stock, right? Because short put, 36.5 put, that means I'm expressing my bullish bias that will stay above that level. So if I see that that level might not hold, one way is to defend it, right? So that would be the proposal. Any questions? Bouncing back. All right. And even staying at the same level. So again, waiting for 5 minutes, right? 15 minutes, 5 candlesticks, because we need the reference point, right? We need the anchor. where we're gonna trade that. For now, let's put an order to try to close. What is it trading at? eBay. What is it trading at? So 18 cents by 36 cents. So let's try to close it for 15 cents. Buy to close 12 cents since it's going higher. $16.34, more close to almost 1%. Right? So now trying to close it short put for 12 cents and see if it bounces back. Or close the short put. For the first candlestick. I don't know if you guys have any questions. So it's 20 cents. You can close now for profit. Let's wait a little bit. Okay. So we have first candlestick, still waiting. Occidental continues to rally 3%. Okay. So I'm looking over my positions, just make sure I can close them. For now, so we have 10 minutes, almost 10 minutes, 2 candlesticks, looks like 38 is the overhead resistance. Let's see, what's the, so 12, 14. Looks like it's losing momentum. I'm gonna close it for 17 cents. 16 cents. 16 cents, so still profitable trade, right? I mean, 18 cents on the $40 stock, almost 0.5%. So, and we'll monitor it. All right. Any questions on the trade? Let's see what else is happening. Robinhood, Coinbase, similar results in terms of performance. Not a lot of people trade in Bitcoin, right? So this Bitcoin rally is probably mostly institutionals because Coinbase and Robinhood see a big drop in the retail activity. And accidental petroleum continues to go in higher, up 3%. And let's say Rivian dropping. Sentence 60 continues to go up. 2 more minutes. All right, let's see. Jeff, welcome. Scott tomorrow. Oh, today after the close. So morning bell usually I cover. He covers. No, he usually does closing bell. He doesn't do morning bell. Mark, good morning. Jeff, recommended position size is 2.5%. 2.5% of your account value as a stop loss. So it shouldn't be, I invest always 10% of my account value, right? Because depending on what, Rivian will move more than, eBay, right? So you can't really have kind of just an absolute value, right? So I propose to find a trigger point, right? Anchor point, right? Your stop loss or anchor point that at that anchor point, you know that you're not going to risk more than 2.5%, right? So, you can give me any examples of the stock. I just went over Spider's example, right? So first you need to decide how long do you usually hold a position. Are you a day trader? Are you more of a longer term trader, right? And on Spiders, you basically say, not how much money I'm going to invest, but where am I going to exit out, right? So for day trading, I would say 430. 430, so it's 8 points. 8 points on $10,000 account, I would take to, $250 divided by 8, right? So 30 shares, right? So 30 times 8 is 240. So that's the thought process on position size. Jeff, let me know if it makes sense. Yeah, so risk is 2.5%. Paul has not mentioned monetary Paul maybe in Q&A. Okay, Paul, when does the Paul talks today? Let's see, today is Wednesday. Wednesday. Speaks 8:15. Oh yeah, so he's delivering opening remarks. So and then I think tomorrow he also speaks. Yeah, so tomorrow and today his Paul speaks. For now, Spiders are slightly positive. Utilities are down. And that's about it. And then in terms of, more importantly, interest rates, let's look at interest rates. So 30-year yield dropped significantly, right? You can see it's sitting right on the edge of 50-day moving average and on the support. So if we can put, if the bears can push the yield down, right, TLT up, then that will give another boost to the market. But for now, it's oversold and it's sitting on the support. So you need to see, maybe his speech can break that down. But 10-year yield, very similar setup. Questions? Okay, so we have 3 candlesticks. Okay, let's look at eBay. So eBay did reverse. Let's see what else we have. I don't know if you guys have any other questions. So eBay, nice rebound. So at this point, yeah, short put is 7 cents. So if you waited, now you can close it for 7 cents. So that's a good example of waiting 15 minutes to kind of figure out, which direction the stock is going. And then let's see, Rivian, not going anywhere, actually down. All right, so Occidental Petroleum still at session high. Divan Energy down 1%, eBay down 4.5%, CPNG's down 7%, Rivian basically flat, it was all over the place. Lucid down 5%, and Robinhood is down 13%. Any questions? What percent of cash am I now? I'm still bearish long term, so I would say 40% of my portfolio is in cash right now. So 40% of my portfolio is in cash right now. So my thought process is still that it's a higher pattern of higher highs, higher lows. But if you're a long-term trader or investor, you have a limited, I think, we can get to 445 would be core scenario, best case scenario 452, right? So that's how much percent to the upside, but to the downside, I think, eventually we'll get to 380, probably next year, not this year. But, it could be this year, just depends on macroeconomic data. So I think risk versus reward at this point doesn't make sense to chase the market. I would, consider buying on pullbacks and still have I don't understand position size. Do you have a rule of thumb? Yeah, so position size, it's written down here. At any given point, 2.5% of account value, right? 2.5% of account value. So average account is $10,000, right? So if you have $10,000, right, 2.5% is $250. This is not how much you invest in. This is how much you risk in, right? So then, give me any stock. Give me any stock at the time frame. Then my question is, how long do I want to hold this position, right? So let's say spiders, right? Let's say spiders, you think, okay, we can get to 455 by end of the year. I'm buying now, I'm risking 440 to 425, 15 points, right? 15 points is at risk to make, 18 points, right? Let's call it 15-15. So, risk reward 1-to-1, right? So 15 points, and I just said that I don't want to risk more than $250. So I take $250, right? $250 of my risk, determine position size. And, I would split it into two. Maybe buy 8 shares now, which is 8 times 438 is $3,200, and buy 8 shares more if it does drop to 200-day moving average. So it depends on beta and it depends on support resistance levels, right? If you see something breaking out, let's see what's a good stock to try to. Say LLY, perfect. So LLY support is at 600, right? Support is at 600. We've been trading the stock, right? It's been support and resistance. So if you're short-term aggressive trader, let's assume by end of the day we're going to close at this level, right? Then what is your stop level? Tomorrow morning it's 8 points, and you want to do it right below 600. Let's call it 10 points, right? So here you have 10 points divided by $250. Right? 10 points, that's 25. Shares, right? So 25 shares, right? If it drops 10 points, I'm out. That's $250. I would also split it into half. Let's say 12 shares now and 12 shares if it does reach 600, and then you can make a decision. So 12 points. I'm spending 3,000-4,000 here. I'm spending 6,000. So it depends on. It shouldn't depend. Like I always invest $5,000. I think that's anchor point, right? So or reference point. And we have webinars and on this topic on Yellow Tunnel. So I encourage you to go to Yellow Tunnel and read the blog, right? Under Power Trading Markets, it's talks about trading psychology, but also talks about different topics. And I think prospect theory was here. Yeah, prospect theory. Basically talks about right that this reference point is S-shaped and asymmetric. The way you look at your value gains and the way you look at losses are different. So it's asymmetric, right? You need some kind of a reference point to make sure that you will make the right decision, and you're consistent, right? Because if you don't do this, basically what we usually do, if you have 100% chance of closing for the gain for $450 versus 50-50 chance to make $1,000, you more often than not you will take $450. But on the reverse side, if you're down $500 and you have 50-50 chance of losing $1,100, you will take 50-50 chance of $1,100. So that means, and if you're doing, if half of your trades successful, half of your trades are unsuccessful, you're going to continue to lose money, right? Or even 2 to 1. 2 to 1, you'll break even. Or in this example, you're actually going to be still losing money, right? If you have 2 successful trades and you make $900 and 1 unsuccessful, where you lose $1,100, you're going to make the right decision, and you are avoiding this pitfall, right? This trap, this emotional thinking, right? Which is not very analytical, right? Going back to system 1. So that's why reference point is extremely important. I encourage you to take that into consideration. Jeff? Yeah, we do have Jeff, both Tradespoon and Yellow Tunnel, we have a recording. So I encourage you to record this. This is a very hard concept. It took me years to understand this, right? So but you need to understand this, right? You got to start thinking about risk, right? Not I'm going to invest X amount of dollars, so I'm going to buy X amount of shares. Then you will more often than not, you will fall into this trap of loss aversion, right? That is a classical example of where all the traders went through. Not all, but 99% of all the traders went through. Once you understand the prospect theory, you understand this example, right? Then your reference point is this: how much risk am I willing to take in order to invest into XYZ, right? And then when you're confronted with the gain and losses, you will be consistent. You either always take a 100% chance, right, and cut your losses at 500 and take your gains at 450, or you take 50-50 chance, right? Always take. I mean, in an ideal world, you take 50-50 chance, and cut your losing trades short, and grow exponentially. It doesn't always work, but at least if you're always consistent on taking 100% chance of $450 when you're making money, and when you're losing money, you're taking loss of 500. Now all you need to do is have a better than flip coin system. Successful trades. Now, 2 trades successful, you're making $900, and 1 unsuccessful, 500. So every 3 trades, you're making $400, right? So that's a good system. And what decision do I make? That is the most important decision. Have a limit on market capitalization. I stay away from penny stocks, small cap stocks, right? I always trade liquid stocks that trades in pennies. I mean, their market cap is small, right? Like especially Lucid, I don't know what the market cap is. But to me, more important than market capitalization is liquidity. I want something that has weekly options and trades in pennies. If it's liquid, because it's a trader's market, I can trade it. Investing, I can invest into LA Lilly, right? LA Lilly, I mean, it's a large cap stock, but it's not the most liquid name in the world, right? Less than 1 million shares have been traded, 3 million shares. So that is my point. I don't like illiquid stocks, especially when you're trading options, right? You can get really stuck in these trades. Mark, hydrated muffin. Well, Mark, please don't forget to leave a review. I'm waiting. Appreciate that. Any questions? All right. So let's review the rest of the position. It's almost 9 o'clock. Let's see how's the rest of the stocks. So Rivian continues to deteriorate, actually turning negative. Right, so it's a good rule. 15 minutes close, and then eBay. Right. So it's good that we closed that short put because it's gained and now it's start to drop. Okay, let's read the positions. First of all, let's look at the interest rates. So nothing has changed. 10-year down, 30-year down, TLT is up, dollar is below 106. So this is all bullish setup. As long as dollar below 106, that's bullish. As long as 10-year yield continue making lower lows and lower highs, this is all bullish. Market turning slightly negative. Bitcoin 2% after a strong rally. And Germany is up. Oil continues to deteriorate. Crude oil is a problem. Continues to trade lower, and Bitcoin is in stable consolidation. All right. So eBay, I'm out, right? If you're not out, I mean, I would still encourage you to close the short put because eBay can pull back. You want to free up your buying power. Plus, market is volatile. Volatility can pick up any moment. IWM, right? Either if on a smaller account, again, going back to this anchor point, on a smaller account, again, I'm buying 170, 175 call. I'm risking, I bought it for $8, sold it for $3, right? So $3.20. So I bought one contract. It's $17,000, right? You still look at the call. So it's on a higher price, strike price, but my reference point is that if it's down 50%, right? If the spread is down to, let's say, $1.50, I'm out, right? So I'm risking $150. That's my anchor point. And if it's down to $150, maybe I buy another contract. If I still see that the market potentially can get to the, Christmas rally, right? So that's IWM. LA Lilly continues to trade higher, right? It continues to trade higher. Still have exposure to LA Lilly long. Murphy Oil is in trouble together with other, right? That's the bear argument. If we're in the bull market, why is crude oil, back to 70 level? But it's oversold, right? It's below 200-day moving average. Day 1, day 2, we've been in the same situation in many other asset classes. In utilities, it would just continue to fall through. Because of the interest rates. In here, it's lack of demand. It is ABC pattern. It's probably overdone, right? At this point, I think it's just a matter to wait to see how far the C is coming. At some point, we will have at least recovery. So at this point, I'm just trying to minimize the loss, right? I'm looking for this wave D, right? If you follow. So at some point, it will bounce back, whether it's at this point, 200-day moving average, a little bit lower and a little bit higher. So that would be my point. Again, it's all about a reference point. Because I split the trade into two, I have the luxury of waiting, right? I'm down close to $250, no signs of recession, so I'm not sure why the oil is, I know because demand is slowing down, obviously. So I think it's, I'm kind of nervously waiting and looking at it, but I have a luxury. If you're down more than $250, I would exit out, right? Because just like utilities, it can continue to deteriorate further. Silver 2023, it's a dollar play, right? Dollar did bounce back, silver pulled back. I still think, buying to pullbacks. Dollar should pull back, interest rate should pull back, and silver should bounce back. Do I look at open interest when picking an option, Ted? More than the, especially for short-term trading, instead of open interest, I look at bid and ask spread. If it trades in pennies, then that means the volume is good and open interest is good. If the spread between bid and ask is wide and volume is low, it doesn't matter what the open interest is, right? So is the spread, right? If bid and ask about like Rivian, the reason I'm trading all of these stocks as opposed to other stocks is because they have high liquidity and they trade in pennies, right? Otherwise, I wouldn't do it. Maybe you can explain that. Thank you. Okay. So that's silver. Spiders, I closed half of the position. I'm still waiting for the second half to exit. I don't have any hedges, right? I think, we're still, it's a pattern of higher highs, higher lows. I would be a buyer into pullbacks. I'm waiting for 444. At 444, I'll probably close the thing. I think Christmas rally treasuries should continue to go higher. And those are the only trades I have. Any questions? Any questions on Discord? So Rivian, yes. I mean, I actually thought the risk was to the upside. I mean, we did have a nice rally. It was almost at 20 pre-market, and now it collapsed. So, but still for profit. And then that financed the long call, so it's still profitable trade. Thank you, guys. I will see you tomorrow morning. Thank you. Discord team, any questions? Did I answer all the questions? Oh, the stock symbol is WISH. WISH. Context logic. Internet retail. I mean, the volume, right? I don't trade WISH. The volume is small, right? Less than 500,000. Like, it's just, if somebody who has a lot of shares decided to sell, he's going to push the market down or up, right? I don't want to be dependent on, one person who's going to unload, 50,000 shares. So 121 million, it's small cap stocks, negative earnings per share. I don't like to trade. Obviously, it had earnings and it popped. I don't, you might, I mean, you can trade anything, right? You can trade anything. You wanted to clear this level, right? That's, we're trading September highs, So, no, I don't trade the Swish. I don't trade, options probably illiquid. No, not probably, for sure illiquid, or don't have options. And this is, if you're trading on technicals, you would not trade the stocks. If you're a technical trader, you believe in technical analysis. If you believe in fundamental analysis or some newsletter that says, listen, the stock can continue going higher, it would be like an investment trade, right? It will be more of an investment, because it's very hard to trade illiquid names, my personal opinion, right? If you talk to traders that are experienced, they don't trade illiquid stocks. Short-term aggressive traders. If you want to invest because you think this is a great company, okay, then that's totally fine. Yeah, cheap $5 stock, again, that is the most important, biggest trap, right? Psychological trap that traders do. It doesn't matter if the stock is $5 or the stock is $180, especially if you're a stock trader. Option trader, it matters, because 100 shares of, Lucid at $4 and 100 shares. But let's talk about stocks. If you have, I don't know, let's say $5,000, $1,000. It doesn't matter if you're trading $5 or you're trading $180, $2. Think of percentages, right? Risk aversion, right? Prospect theory is that you don't want to be down to $150 on a $4 stock. You don't want to be down more than $250 on $182 stock. You don't want to be down more than $200 on, LA Lilly, right? LA Lilly is $600 stock. I would argue, you have a stop loss at 600. Buy one share. Why does it matter if you buy one share of LA Lilly for $600 or you buy 100 shares of Lucid, right? It doesn't matter. What matters is how much money are you willing to risk. So I know a lot of people like, oh, I like penny stocks. This is just because, it's one of those mental traps, right? One of those policy, cognitive dissonance, right? Cognitive. Right, so it's one of those cognitive dissonances. I mean, we all have it. When I started, that's not for me, but $5 is, I love it, or 5 cents even better. It's a cognitive dissonance, right? I mean, it's just, we think about absolute values. We shouldn't. In trading, I believe you need to think about percentages, right? How much percentage of your account value you're willing to risk, or at least percentage of your account you're willing to invest, right? You can, if you're trading the same stocks with same support resistance levels, okay, then at least say on a $10,000 tech stocks versus spending $1,000 on Apple, you have completely different exposure. Completely. So next level would be think about the risk, right? Risk aversion. As a trader, you have to think about the risk aversion as opposed to absolute number of shares. John, okay, thank you. All right, John, thank you. No, I mean, there's no right or wrong. This is just my experience, and I'm sharing. Maybe for some people it works different way, right? For some people, I know, I always trade 100 shares, or I always trade $1,000. Usually, it works for people who trade the same beta stocks. Like most people trade Microsoft, Apple, and Nvidia, right? And they kind of move in tandem, right? Same. So you can say, okay, I'm not gonna Tesla and cost. Okay, AMD. It's continued to grind higher, right? Just like QQQ, it's a little bit overdone, right? Buy into pullbacks, right? Buy into. I mean, ideally, you want to buy it at 109, 110. Tesla, Costco. Tesla looks weak, right? 200-day moving average below. Out of the Magnificent Seven, that's probably one of the weakest stock. I would say, for now, sell into the rallies. Sell into the rallies. Costco looks strong, right? Looks strong. I mean, it has a little hard time breaking through overhead resistance. Buy and pullbacks, right? Costco is a strong stock. AMD is a strong stock. Tesla is a weak stock. And have kind of, long short portfolio where, maybe you long Microsoft $1,000 and you short Tesla $1,000, right? And you make some money on Tesla and make some money on Microsoft. All right. Thank you, John. Fast. Jeff, Fast, I mean, it's a decent stock, right? It's not small cap stocks. It's not very liquid, but it's, well-recognized name. 3.5 million shares, better. Pays dividend. If you're looking for dividend, it is strong. At least this is probably your anchor point now, 58. So you can say, listen, I'm willing to risk $1.50. My stop loss is $1.50. That's my anchor point, right? Because I think it's actually going to at least retest the highs, right? So you're looking for $1.50 gain versus $1.50 loss, right? And Christmas rally is probably coming. If you believe in Christmas rally, and that is going to happen, or it will continue. It already happened a little earlier, but it happened, and it will probably continue happening. Okay, then this is your risk. $1.50, $250. Okay, divide $250 by 2. I can maybe buy 100 shares. Maybe 125 shares. Make $250 versus lose $250. John, thank you. Appreciate your comments. All right. It's been great audience on YouTube. Thank you very much. I really appreciate your time commitment. Please don't forget to click on subscribe. If you haven't subscribed, please click on subscribe and hit the like. YouTube algorithm pushes the video if people like and subscribe. If they just watch and don't like or subscribe, then nobody else. And otherwise, I will see you tomorrow morning. Thank you. First, thank you. Personal, this is more, I mean, I only see the first name, and that's all I know. But these are very good questions. You're asking great questions, and they weren't, you know, long discussions until you rewire your brain. And to rewire your brain takes time, right? And some people it takes 10 minutes, some people it takes 10 days, some people take 10 years. But the point is you need to rewire your thinking. It takes a little longer time. So you have to repeat it over and over again. And you just, you know, you shouldn't get discouraged. You should just say, okay, no problem. Like I'm a slow 10 times before I get it, right? So it's fine. It just takes time and repetition. There's no wrong. There's no problem with that. Thank you, John. All right, guys, you're the best. Thank you very much. Thank you for your support, and I will see you tomorrow morning.